whole bunch of stuff. Okay, so okay, so from here, see something here. Okay, we're set up right now. We're set up. Take a trade. My brain. Wake up. Wow. We have a single red. We have a single orange. Do you guys ever put your head to your pillow right about to go to sleep, but your mind is awake? Your brain just keeps going and keeps going and keeps going. Doesn't go to sleep. You might get, to your knowledge, you might get like an hour and a half worth of sleep, and then you get woke up, and then you try and go back to sleep, and your mind's back awake the way it was before you've got that hour and a half worth of sleep. That's been me the past couple of days. I'll put my head to the pillow. I try and go to sleep. I'm right awake. I feel toast. I feel like I am toast. News is cool. We got one red, one orange. Doesn't look like it's going to be high impact. It's not a non-train day, so we should be able to take a trade off of pretty much this. Backing out of that, let's see what market has to offer. We have a fair value gap here that was inverted on this candle here. We have a fair value gap here. Has been inverted, yes. Price is not going to continue down. It's going to continue higher off of this candle here, closing above this fair value gap on this right here. From this candle onward, we're looking for price to continue higher, which makes the most sense. We have fair value gap here. It was closed below on this candle. This says price is going to continue lower. Ultimately, we got to go with that because it's the most recent one. Actually, yeah. Because this was a fair value gap that was closed below, this move here would be the most in context because we don't care about this. Price is not continuing higher. It's this candle right here that we got to look at. Assuming in the next hour, 56 minutes, not 2 hours, but 56 minutes specifically, this candle here closes up into this wick right here. If it closes into this or wicks up here, this fair value gap is no longer valid. And as a result, we'd still be waiting on one of our key levels to get hit. And yes, one of these two. From here, what am I doing? What are we doing? What am I waiting for? Let's go ahead and check out NASDAQ, see what it's doing. Yeah, fair value gap here. Boom, boom. Same one, right? It was inverted. Not on this candle like we were talking about over here, because this candle's what inverted this fair value gap specifically, right? NASDAQ has got a different story to tell. 2 candles beforehand, we actually got a closure here. Actually, it would have been this one. This candle here was the closure. That's the inverse of this fair value gap. From this, we're looking at our leg down now. We do not have, oh no, we do. We have a very small fair value gap here. Saying price is going to go down, but it's not going to go down a lot. Look at that. Our key level's already moved. Boom. Go. Go and go and go. 1, 2, 4, 5. 1, 2, 3, 4, 5. Go. That works. 1, 2, 3, 4. 1, 2, 3, 4. Yay, the highs are the same. The highs are the same right here. So, luckily, there is no gap as well. So, this should be an easy trade day. Easy to spot, easy to see, easy to really nail down. So far, this says price is going to go lower for the hourly, which makes sense. And we've been in a downtrend for a minute now. We temporarily broke structure here. Ever since we've been back into a downtrend. Well, we've been making lower lows. Yeah. Let's look at the daily, see what it's doing, because we haven't checked the daily in forever. I'd like to know what it looks like. There we go. Boom and boom. The daily says we had a fair value gap here. It was going down, but it was inverted on this candle here. Price wants to go higher. It wants to, based on this candle here. We haven't had a fair value gap yet, though. We know it's not going to go lower, but it doesn't look like it wants to go higher. From here, we move forward. I don't see fair value gap in this. I don't see fair value gap in this. None here, none here. Boom, fair value gap right here. This fair value gap says price wants to continue lower, which makes sense. I even says so on the lower time frame. Make sure NASDAQ says the same thing. Fair value gap inverted, no more lower. Continue, 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 continue. Fair value gap, boom. NASDAQ's lagging behind the S&P a little bit because this right here says price is going lower. While this one right here says price is going higher. I believe these 2 candles here would be considered our breaker block because we had our order block here. Very hard to tell this one, because we would have needed a sweep down low for it to continue higher. It would have been this. an order block that caused this sweep of liquidity on this low here. As a result, price shot higher. From this high, price came back down just a little bit. And I'm guessing between these three here, this shows the imbalance. There's the imbalance to the sell side. And it's best represented off of this block here. When this occurs, we're looking specifically for price to respect this liquidity level here. Price is not going to come up above this at all for it to continue lower. If the wick comes above this wick here, we're expecting price to continue higher. Yeah, that works. From here, we're going to move down to the hour. Do I think I could do anything else at the moment? What exactly could I do? Well, key level moves, so I have to move it right there. Boom. S&P's lagging behind the NASDAQ a little bit. NASDAQ says price is going to go lower. Sure enough, that's what it's doing right now. It's going lower. We have fair value gap saying it's going to go lower, so from there, it's a pretty done deal. It's going lower. We're not going to take a trade until right around this time here. These two times. We'll look for it to hit our key level, and from that, we'll move on. If it decides to move past this key level before this opens, I will move it. I will actually delete this key level completely because that's before our time to trade. From this point on, we'll be looking at this key level to get breached from these two times. If it does get moved past or wicked under, we'll go ahead and consider that our key level hit. From there, continue forward. With that being said, I'll be right back. Hopefully this is a decent good trade I take. Okay, now I'm a little bit more awake. Let's see if I can get this right now. Because I really don't like being half awake and doing this, just because it's kind of annoying to do it. I can make a mistake anywhere and it just not work. And from that, it's just very, 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 very not good. Because I can make mistakes. Mistakes aren't good. We did close above, we closed above this fair value gap, making this an inverse fair value gap. Inverse fair value gaps are signs that price is going in the opposite direction. Unlike fair value gaps, where price is going to continue higher. As a result, we'll see it move back down. This fair value gap here is a sign of continuation. Why? Because all of this was to invalidate this. So all of this and all of this cancel each other out. We don't need to look at this anymore. We can look at this and pretty much say, okay, yes, price is going to continue down. How much further down? We don't know. We know draws on liquidity lie on the lows, up, down, low. Boom, that's our first one. The best bet is to have this set as a key point, so that way when price does go below this and this here, we can essentially say, okay, we know price is going low. Because this key level specifically could get passed before market open for us and before our trading time here, we're going to set a second one just to be on the safe side. We're also going to set a third one to be on an even safer side, because these two could get passed up completely, which is completely reasonable, completely valid. That's what market wants to do. It'll do it. As a result, we need to be ready to hop on this train down to catch the best trade possible. we're looking for liquidity at all, it'll be under these lows here. That one there. And this looks to be the most plausible areas for liquidity to go. And that, in my opinion, is not too far off. That's about equal distance from these two. And then from this one here down to this one. These are almost all equal distance apart. If price wants to continue down, it's going to do so. And I'm fully expecting within this to have a small retrace. And then, again, if this opens up and it decides to wick below this line or close below this line, I'm convinced it's going to continue moving down per this fair value gap here. If we get a retrace within this and it closes above this fair value gap and we get an inverse, I'm expecting price to go higher, in which case I'll be looking for draws and liquidity up high, which will be something like this here. It'll be something like this here, because we like the long wicks off of the candles. They tell us, hey, price wants to go here. Might want to look out for this, because price could easily go here. I'm not going to mark that because it's so much closer. No. I'm going to be modest. I'm going to put that there because that seems more reasonable than this. And between this, and yes, this right here, that's about, these two are the same distance. This is a little longer. This is a little stretch, which tells me price does in fact want to go much further down because this is more evenly spread out. So we can see our imbalance clearly on this chart here for the liquidity. This is the hourly as well, just so we're on the same page. We're expecting price to go low. So I'm expecting to enter on a short position, price to go even lower, and for us to sell low or buy low to make a profit. There's not much else I'd like to say at the moment, aside from, let's look at NASDAQ. That shot way further down. Boom. We don't have a fair value gap on the NASDAQ now. What's a fair value gap? 3 candles, 1, 2, 3. Where these 2 wicks on these 2 candles specifically do not cover the center piece of this. This is a concerning sign because I was fully expecting this to continue to be a fair value gap. Right now, they look identical with the exception of that candle there, this candle here being a fair value gap. This did invalidate this on both charts. Happened earlier on this. So now we're looking for this right here to continue downward. I want to see what NASDAQ does before I go crazy. The rule's the same. So long as the key levels hit within our time frame to trade, look for a trade. But this is concerning. This tells me I ought to set my stop loss above this high here because NASDAQ is the precursor to the S&P 500, which means if this decides to retrace and go as high as here, I want to be prepared and put my stop loss above this so that way when it does retrace, we could still get that return off of it coming back down. If you don't mind, I'm going to have my breakfast now while I'm having it. I'll just be watching the chart. We did the chart work on the app too. The S&P 500 charts match. So there's no difference between the two, exception of the 10-minute delay. I've been watching that very carefully. Yeah. That being said, I'm going to wait patiently. BRB. Two things I just realized. First off, not only is this delayed, but if you hover over this, you can see where it says delayed and market open at the same time, right? Same thing for the NASDAQ. Second thing I noticed. That's the first thing, right? You can notice that. Second thing. This is the app. This is legitimately another version of the exact same thing you're looking at right now. Oh, wait, no, I'm sorry. The exact same thing you're looking at right now. Can you spot the difference? In case you haven't realized it yet, I'm pointing it out to you right here. Right? Right. So, the difference is simply that the fair value gaps are different. How much different? Very, very slight. What's that mean? It means a difference in price. It means when we go into entering a trade, these two are confusing. Makes sense, but confusing. When we enter a trade, it's going to enter it on the price of this, right? It means I've got to watch this like a hawk because off of market open, we almost hit our topmost key level here, which I'm thinking is the false key level because how do you identify a high? All right, there's our high. I mean, it clearly presents itself. We have an arch and everything, and then boom, we have a high on that. There's a hill. This is the tip. I want to remove this because it doesn't show me accuracy. On the 5 minute, this is the highest point within London session, which makes sense. I'll figure it out. I'll work with what I've got currently. I'm gonna experiment with what I got, and then I will have a trade idea formulated, done in. I'll be right back. Okay. You're about to see the move I'm looking at right now, where this candle decided it's going to start all the way up there, right? It doesn't close above the fair value gap, or at least it hasn't yet. It's still got 49 minutes to go, right? That candle's got 49 minutes left because this is on a 10-minute delay, remind you. So subtract 10 minutes from that time there. It's got 49 minutes to go, and price is shot all the way up to the equivalent of this high here. And you'll see it. Just below that equivalent. So right about, I'll say right about there. I'll shoot all the way up there. We want to see price close below this fair value gap here. Within is okay. Below is the goal. As long as it closes below it, fair value gap is valid. And so price is going to continue down. That is what we're after. That's the only logical thing it did with this move up. It gave us, one, liquidity on both ends. It had an imbalance and then filled that imbalance. So we're not looking for a liquidity sweep because it already has swept. We're now looking at an imbalance to get filled first. When it gets filled, price is going to go as high, if not higher, and this high and this high. So, with that being said, there goes with the price. Boom. You see it. You see it, I see it, we see it. Yay. So, if we were looking for a buy, or not a buy, or a sell position, short position, we need price to sweep either this high here or this high here, because these two are our key levels, right? As well as this here. From this, we would need to look at all the building blocks on down, just to ensure that price is going in the same direction. Because we need a sign of reversal. Right now, price is just continuing on down from this point, which makes sense. I mean, this is the high. Boom. Now we're making a lower low. What we'd be looking for is a break of structure. Not a break of structure, but a sweep. And then from that, on the 5-minute, a break of structure or an inverse fair value gap. That's going to give us the confirmation that yes, price was swept, we're continuing on down. It'll confirm the reversal. I'm tempted to treat this like an order block because price moved all the way up here and filled this imbalance, but it also respected it. So could I consider this a liquidity sweep because there's liquidity within this? I think so. That makes the most sense. With that being the case, from here I would be looking at break of structure or an inverse fair value gap on the 5-minute. We go down to the 5-minute. Well, it looks like a break of structure to me. Actually, that candle there, because we had a closure above, boom, boom, a high there. That would make the most sense to me. But we don't know if price is going to continue higher because, well, no, we do, because the price respected the fair value gap. That's what it did. We have a fair value gap, not here. Yeah, we have a fair value gap here. We're looking for a break of structure, which is technically this, or an inverse fair value gap on the 5-minute, which would be it going back down, closing below this, and barreling on through. That's what we would be looking for. Technically, if we were to go off of that being the liquidity sweep, we have our break of structure here because it closed above, guess what, 1, 2, 3, 4 highs. closed above all of them, and gave us a fair value gap. If this candle closes in the next 3.5 minutes, we have a fair value gap right here that has formed. Price is going higher. We have our order block here, cause the liquidity sweep, boom, boom, sweep of that liquidity. And then, of course, we have our breaker block, the move before, failed retrace, that showed imbalance on the buy side. From that, we have, or actually, yeah, it'd be this right here. This would be the breaker block because it wasn't enough to continue down. So price had to come back up to sweep the liquidity to continue further down, to fill their sell orders in the market, push price back down. We're going to wait on that inverse fair value gap. I want to wait on it because that is a double sign of confirmation of this sweep being a valid sweep. And as a result, we'll have the best trade entry off of it. And again, we're looking to take profit on this level here. We can zoom out and take levels here all the way down into this right here. Yeah. Let's go ahead and take a look at this because this is 2 candles ahead. We have not hit key level on the hourly, but we did, price did go up into that fair value gap. Dang, it's taking forever. Here, what if I refresh the app? There we go. So far, it's respecting this fair value gap here. So far, that's what price is doing. Okay. So I'm looking at it now. Boom. This right here inversed this fair value gap here, which makes sense. That does make sense. I don't think we can use this leg up as a fair value gap. It's not a valid one anymore because we have an inverse fair value gap on the 5-minute per this right here. This right here was our fair value gap until this closed above it, inverting it, canceling all of it out. So that's okay. However, we do have a valid fair value gap up here, right there. It's a small one, but it's there. As well as a breaker block. Price shot all the way up, filled that and the breaker block, which makes sense in the downtrend for its continuation. It's got to sweep the liquidity on this high here and here, right, for it to continue on down. So we're waiting on this fair value gap here to get inverted. Once it does, we know price is going to continue on down. That'll be our 5-minute inverse fair value gap confirmation that we need. After that, we move on to the 5-minute continuation confluence, which is that fair value gap, the breaker block, or the order block. It filled the breaker block up here. Now we're just waiting for it to be inversed. Because remember, in a downtrend, an order block is the move up that essentially sweeps liquidity or causes the sweep in liquidity, and as a result, continues price on down. It'll sweep liquidity here, and then from this, it'll break structure from this uptrend back to a downtrend. We'll see this fair value gap inverse, and then we're looking for essentially a lower low, lower high first, and then a lower low. We'll enter off the low, and from that, watch price plummet. I want to see if this works. I saw somewhere, I was researching, looking up stuff, really learning more about this. And I saw a post that said it's not a theory, it's not an equation, it's not a tried and true one size fits all when it comes to trading. It's a methodology you've got to learn. Different people use different methods. Some people use methods that have been around for hundreds of years and still work most of the time. That's not saying they all work all the time, otherwise everybody would be rich. That makes the most sense to me. So it's mastering a methodology in which someone decides, hey, this makes sense, let's go ahead and enter market off of this, or because of this. Or some mathematics. Hey, look, there we go. If the candle closes, we have an inverse fair value gap on the 5-minute. Yay. I've seen this method work, and I've had it work with me from time in and time out. And I'd like to see it work again. I want to get good at this method because I feel as though I can make profit happen from this method on this market. Yeah. The things with method, though, the things with methods is learning the tricks, learning the rhythm to it. And I know the time it's going to take for me to actively pick up on it in such a way. Autopilot doesn't have anything on me because I am so much more of an autopilot. It's all in the looking of a chart and going, yep, that's what it's doing. And when I make a mistake, that's where the psychology comes in, because I understand the approach to psychology now. Per TGR Trades' videos, because you can get really confident, you can get overconfident in taking trades pretty quickly. I've had it happen in actual video games. Like, I've stressed over video games, fake inanimate pixels on a screen. I've obsessed over them. And I've gotten so stressed over an investment and losing out on it that, bro, how did this happen? And I know the feeling of having literally friends go up to you and say, I thought you were right. What happened? I thought you were good. Why didn't this pan out the way you predicted it would? Something new occurred. Never seen it before. And that should be the psychology, the mentality I have about it. It's something new. Interesting. I shouldn't have stressed over it. That's interesting. What exactly happened here? And it's a learning experience for all of us in that aspect, in that regard. But I can also understand the arrogant ones that get too confident with their trading. Oh, yes, I'm the greatest trader that's ever lived. This strategy is foolproof. I could take a trade right now and make $100,000. I get it. I get it. That's not the way you go about things, though. Look at that. We did not have an inverse fair value gap. We're going to wait patiently on the break of structure and that. Dang, we even swept that high right there. Did not see that a second ago. Okay, so we swept that high. We didn't invert any fair value gaps with that. No, we did. We did. That one right there. We didn't hit no, we did on that. If we treated this as our liquidity sweep, right, we'd be looking from this candle onward. The break of structure first, then the inverse fair value gap. After this, we'd be looking for the fair value gap that it produces from that inverse, from that reaction back up. And then from there, a break of structure to the downside or an inverse fair value gap on the 1 minute to the downside. That way we get the best entry up high, watch it fall down. So we'll wait on the 5 minute, specifically for the break of structure or an inverse fair value gap. We have to see it with our own eyes. Our toddler, man. My nephew's probably really, really clumsy. I'm not making fun of him either. Just Buddy trips over his own toes sometimes, and bro will land flat on his face, thinking it'll be okay. It'll be okay. Like I'm talking like, not that he'll be okay in his mind, but that he doesn't know. He's like introducing himself to pain at the moment. He's learning to walk. He's learning not to shut his fingers into doors, even though we've rubber band them shut. And Buddy still hasn't picked up on that. Like, I feel bad for him. I know he's got to learn it. And there's only one way to learn not to shut your fingers indoors. But still, like, I feel bad for him. It's getting pretty boring, isn't it? Yeah. Yeah, it's kind of what I figured. I'm going to pause the video because it's not doing much right now. And we won't see it do anything much until a little bit later. Yeah, BRB. Okay, so I think we had a break of structure. Good, okay. So we had a high here. This was news, if I'm not mistaken. This was news. Hang on, let's see. Yeah. It's 8:30 now. Boom. This was news. Looks like we have a reversal. This right here was the reversal. It's gone up ever since. We have another candle way up here. Actually, like right in there. In either case, that's okay. We'll have a more defined key level hit off of this move up. If it continues higher, we know it's just a retrace. And as a result, we'll be looking for the reaction back off of it. Because it wants to come up to this liquidity right here. We know it wants to. From this, how much higher will it go? Hmm. We inverted one fair value gap, but I'm looking at a separation of data here. Do you see this right? This candle right here? It's a bit floaty, right? I'm looking at a fair value gap right here between this wick and this wick. That's what I'm looking at. It's going to be a small fair value gap. So far, this has been respected, showing price is going to continue lower. Same story here. We have fair value gap, shows price is going to continue lower. That makes the most sense considering on the daily downtrend. We have a small retrace up. It's still a lower high than this one. We're on the move back down. We may have a break of structure here, which case that filled a fair value gap. What about this one? That hit a low. Barely wicked it. Okay, so assuming this right here is a sweep, right? Working off that idea. Assuming this is a sweep, we'd be looking for on the 5-minute, but we're on the daily. This is a large time frame. We're trying to figure this out on a larger one, right? We're looking for a break of structure or inverse fair value gap. If this were to be considered a sweep, we have our inverse fair value gap right here. From that, we'd also have to look for a fair value gap on the 5-minute for signs of continuation. The continuation was this right here. We didn't get the up fair value gap we wanted. We got a down fair value gap, which means this is going to go much lower per the daily. We do have a breaker block here. This breaker block shows imbalance on the buy side, creating a lower high. As a result, that's our sign of continuation. Price is going to go further down, and that this was just a retrace, small retrace in this large downtrend. As a result, we'd be looking for a break of structure or an inverse fair value gap to enter off of and to continue down. So what I think is going to happen, because we already have a fair value gap here, right? We'd be looking for the price to continue higher, close this fair value gap completely, actually fill this entire section of floating data that's just missing because fair value gap doesn't like showing data anymore. We'll wait for that to close above, and then from that, we should be seeing price continue on down. So I'm looking for this key level to get hit first. Once it has been hit on the hourly, I'm confident in saying from that, look for this fair value gap here to get inverted completely, and from that, we can enter on down. Yeah. We still have 15 minutes to go. I think what's going to happen is we're going to have this move up, right? This candle won't, but the next one will. It'll move up, close above this, hit this key level here, maybe even wick up here. Once it has, we consider it hit, done and good. We know we are in a downtrend. We should not be expecting price to just continue up for no reason at all. So as that is being hit, we'll go down the chart and find each and every single one of our confluences needed. It's a good sound. I'm missing my music. My music is missing. I wish to hear sounds. One time I go to my account for music, and oh, that's because it's on the wrong one. There we go. Sure. Okay. So that's what we're waiting on right now. We got 13 minutes for that candle right here to close. Again, I'm looking at the 10-minute time dilation. Working with what I got currently. So we'll be right back, I think. Just to save some time. Make sure it's not a boring video. Be right back. Okay, so on the app, we can actually see it here too. We have fair value gap here. Boom. And it is going to get closed below on to this candle here. No, this candle here. It'll get closed below. We got 3 minutes for it to close for to validate the fair value gap to inverse it. Right. That's on the 5-minute. After that inverse is good, we have the break of structure as well. It's just there. We have our breaker block, the retrace that did not make it to the previous high. We had an order block that swept this previous high here. We're looking for the break of structure or the inverse fair value gap on the 1 minute now. I believe we may have just gotten it off of that. We made a new low. We're waiting for a retrace before we press sell. We also have fair value gaps on the downside, signaling signs of continuation. First time I've heard a Mentos commercial. Wild. Wild, wild. Anyway. There we go. We had an inverse fair value gap on the 1 minute. I entered off of it on a sell. We know price is going to continue lower, but if we were to enter right now, it'd be right where it is. Let's just go ahead. Why not? Experiment. This is what we do. Stop loss is going to be up above this right here. Take profit. Let's start with this one, because I don't think it'll go down to that last one. That's what we're looking at. 2.08 return, risk to reward. Yeah. Mini retrace, and then continuation. We treated this right here as though it was a key level because it hit the fair value gap on the 1 hour here. This is what we did. Fair value gap, boom. We came up, closed above it, good. From here we had a fair value gap on the 1 hour. It went up and into it, hit our key level. From there we went down to the 5 minute, not the 1 minute, the 5 minute. Okay. This was where our stuff hit. We were looking for a break of structure or inverse fair value gap. Break of structure here. Oh wait, no. Here, because this was, again, in trend, right? And it didn't create a low. So we were looking for this off of the downtrend. Confirmation break of structure from here. We had fair value gap right there that was inverted here on this candle. From there, we go to the 1 minute. Actually, we stay on the 5 minute because we needed an inverse fair value gap first. Boom. We waited for 5 minute continuation confluence, which was the fair value gap, breaker block, order block. Okay, sure. Okay. So we had that was annoying to even listen to. We had this right here. Fair value gap that was inverted. That's the 5 minute. From here we look for another fair value gap. We get it off of this candle right here, I believe. We'll go ahead and just check that here. Yeah. So this fair value gap was inverted, and as a result of this fair value gap forming, we also confirmed that this right here was our breaker block, or our order block that swept this low. From this, we went down to the 1 minute. We checked all of this right here and found that we had an inverse fair value gap. Yeah, right there. This was inverted, and when it was, we found that price was going to go further down. We entered on not this candle, not this candle, not this candle, but we entered on this candle because we determined this right here was inverted. Because up until this point, it was respected. This little bit of fair value gap here was, and this fair value gap right here was. This went far enough down, it inverted that, we entered off of it. That's what we did. So far, we've made 32 cents on Trade Locker. That number's a lot larger over here. Let's see how right this was. The data sync is so bizarre on this. Sweet. Okay. For this move, we've officially made a little bit. We actually hit our key level. We hit this here. Yep. Okay. So it's delayed in order as well for the paper trading thing. Per trade locker, I was here. Trading view, I traded here. Mm. Mm. Sure. I think this Saturday I'm gonna make a video. Just watch. I'm gonna stream it. Maybe I don't know. Might stream or just record a video of me looking through all of this week's trading videos and then comparing them to one of TJR's videos and seeing exactly what I did wrong because it seems as though like I'm running this pretty well. Like the chart work is there. It's there. It's good. I think. I need to stop thinking and start knowing because this is the livelihood I'm hunting down. I'd like to see me be successful at this. So I'm gonna do that. I'm gonna get good at determining this. Yeah, that doesn't make any sense. What the heck? So on Trade Locker, we don't hit this again. We don't hit this line at all again. Oh wait, I'm wrong. I'm sorry. We hit this line here one time, and then we go up and then retrace. This is still dancing around where the entry is. My mistake. I forgot to subtract 10 candles. I'll be right back. Fixed it. I'm awake. It was because of the light. Kinda. Sorta? Maybe. Anyway. Let's go ahead and throw this back on. Turn it down maybe a little bit. There we go. So far, our trade idea is wrong. Really wrong. We are working with paper trading at the moment, so. Well, okay then. Wow. Anyway, we hit our key level on the low side there. We would go down to the 5 minute. Look for either a inverse fair value gap or a break of structure. We got the inverse fair value gap right there. From that, we'd be looking for breaker block, order block, equilibrium, or fair value gap. Boom. Order block, sweep. Order block is sign of continuation to the upside. Confirmation would be break of structure, inverse fair value gap on the 1 minute. Boom. We're learning. We're learning the hard way. Do this. Why am I doing this? Why? Why? What's the matter? What did I do? Hmm? Why did I do that? Why did I do that knowing I could have made profit right there? Hmm? Why could I have? How? Why did I do that? Now my stuff's all over the place. Because I'm new and inexperienced. I'm not impatient. I am impatient. Wow. I am impatient. Very, very much so impatient. I will second guess myself quicker than anything else. Psychology coming into play now. Master the emotions. I'm missing something outside of psychology. Psychology specifically. Hmm. Hmm. How embarrassing is that? Look at what I did right there. You see that? Comment section. You see that mess? This is how fast my mind changes. 10 minutes. That was terrible. Man, that was really bad. What did we have? $200 before I swapped? Awful decision making right there. Took a little longer to decide on that one. On this one specifically. No, I don't know. We may have done the same thing. Yeah, I did the exact same thing. On both of them, I did the exact same thing. We hit our key level twice before 950. Before 9. It's currently 9:30 in real time. We hit our key level twice though. Looks like our initial trade idea was correct. We're going further down. That's good. Yay. We're going further down. Ooh. Here we go. I have a stop loss and take profit set up for Trade Locker. The same one I have for Trading View. Same margin. Now we wait. We either get stopped out or we take profit. If we take profit, yay. If not, we'll get stopped out. I am going to make a video Saturday. That video is going to have a combination of instances, the exact instances where I made a mistake when it came to finding all the building blocks needed in this market. And it's going to be a montage of me essentially making fun of myself. Like, whoa, this guy actually did this. This guy did that. Why did I do that? Why did I do this? This is in an effort to teach myself what to do and what not to do. Just so we're on the same page. Like, I will have the work spread out all over this, and I will go over each and every single block of the way, every single step of the way, and identify each of the problems I made for myself, and what I did wrong, where I did wrong, what I ought to do not to do that again. And then I'm going to make fun of myself at the end of all those videos, saying, we'll do better next time, we'll do better next time, we'll do better next time. And every single time after that, we just kept deviating away from, this is what I'm doing to be a profitable trader. Because I don't want to change this anymore, I'd like to minimize this, leave this the way it is. What I'm going to do is this right here. So you guys can see the stop loss, take profit level, right? I'm satisfied with this. I'm not going to change it again. What I'm going to do is I'm going to pause the video. When we get to about, I'm going to set this line up. When we get to this line right here, that's 10:37. That's in the next hour-ish. A little less than an hour away. When we get to that line, let's go ahead and mark that now. Boom. This. That. When we get to this line specifically, we'll even color it so it's nice and good. Boom. When we get here, I'm going to unpause the video, see where we're at. Just cuz. We're going to check in, make sure all nice and dandy. We're also going to check this just to make sure. I'm going to check this and make sure. That says 10:37. Boom. Boom. Can you... I'm going to help myself out right quick because this app is finicky. Boom. 10:40. Just to keep it nice and even. This, that, good. Same line, same spot. Same market, same everything. That's essentially what we're going to do. We're going to wait until that line's hit. And then from there, yeah, that's kind of stupid. Nope. How do you exit out of this? This right here. Oh, good. Stay away from that button. I know touch no more buttons on this because that is finicky. I'm going to pause the video now. We'll be right back and hopefully we actually make a profit. I really hope that does not start. Hi, how are you doing? We missed our area of I'm going to be back. As you can see, with a little patience and time, we had, guess what? Our low here. I should have been more aware, more fine tuned, ready to go, because as you can see, we had our leg up there. We were $1,300 in the green. Now we are not in the green, and are essentially waiting for the price to come back down. We're going to wait a little bit longer because I think that's the right thing to do. We are still in a downtrend. Nothing about it has changed. As a result, we are essentially just going to wait maybe a couple more hours. We're going to wait a couple more hours. Let's see what it does. We will be right back. I will pause the video again. We are 100% going to be making a video Saturday. Not a live stream, but a video Saturday, detailing all the moments I got wrong in this week. And from that, yeah. I'll pause the video now. We'll be right back when the position has closed. We will either hit stop loss, get stopped out, or we will have a take profit that's acceptable. We'll accept it, and we'll move on. A better trader. Okay, so I've been clearly doing a lot, and I think no, we unpaused here. I think we unpaused where we were paused here. This is where we were good. We were good right here. We were so fine. What is that luck, bro? How did I guess that would just continue up after this? What the heck? As you can see, the general trade idea was right. It was right. We did go down more than we did in the past. This idea was right. We should have got out right here. What did I do wrong exactly? Because this was our lowest point. It went after this fair value gap here. Which means we could have taken profits from here, maybe there, maybe that one, but yeah. It's currently 2 p.m. I've still got a video to edit, and it is going to be a good one. It'll be the only video I post for the remainder of the week. It'll be posted Friday, 3 p.m., just so we're on the same page. I think I am going to stick with what I said before on I'm no longer going to be uploading videos to this channel specifically until after I've taken a trade and it's good to go. I will not be uploading a separate video breaking down some of the past videos because it's not getting any retention. It's a lot more content than I want to put out on this channel that isn't really necessary. Though it's good to have notes, it is also good to have videos that are sweet to the point. You have one great big video with what I want on it. Saturday, I will be posting one video detailing all of the trades I would take this week, and from that, it'll be the only video on the weekend that I post. The only times I will have a video on the weekend for this channel is when I'll announce it. You can be sure to check that out and know by subscribing, liking the video, and of course watching the video up to the point where I say, hey, we're going to upload a weekend, because I'd like to know where I made mistakes at and where I can improve on them. The trade idea is wrong right now. I'm looking at another 10 minutes ahead into the future. Right now, I have lost $6 on Trade Locker. I've lost $800 on this Trading View. Right now, I think we're still in the mode for down because we are still respecting a downtrend. We are in a downtrend and it is being respected. I think we are going to go much further down. I do not know how much further down though, because right now its move was taken care of and it has since consolidated, and typically after 8:30 is when price will consolidate. We made a mistake writing this. We had a change of heart because we thought it was going to go higher. We were wrong. It went lower. We got back in roughly above where we wanted to swap positions, and we saw it continue lower. However, as a result of my negligence and watching this price go down, thinking, oh yeah, it'll just keep going. Yeah, no, it didn't. And as a result, we missed out on a valid exit trade. I am going to be looking up videos the remainder of this week, tomorrow, and Saturday, after I get through posting both Friday's video and Saturday's video. And I'm going to be looking into exit strategies within the market, so I'm not losing money off of holding on to it for too long. I believe I have the entrance method that I'm after down packed. It is the patience that I have to master, and then the knowing when to exit so I'm not losing money in the end. We'll hang on to this for another hour or so. I'm not going to record all of it, but I am going to hang on to it. I think what I'm going to do is I'm going to come back to about this candle here, and I'm going to wait for this candle to form completely. I'm going to unpause the video, and I will be attentive to this, right? Once I'm fine-tuned to this, from here, we will figure that mess out. We'll figure out all of what we need to in order to exit the market. If it comes back down into this, I am, like, if it comes down, I'm tempted to leave within these two. I don't care where it's at along these two, as long as it's below this line and above this line, I'll be exiting the market then. With that being said, thank you guys so much for watching. If you did enjoy the video, drop a like. In the event you guys really like the video and want to see more, subscribe so you know when I post. And so when something random happens like this weekend's upload, you know why. And then comment below, what other content would you like to see? I have a live stream coming up Friday. It's for a random game. It won't be posted to this channel or Orbs. It will be posted to Orbs Vault because that's the channel I stream to. After that, yeah. It's fairly simple and fairly understandable on that part. I will see you guys in the next one. Let's see. Okay. Okay. Why do I get the feeling? Why do I get the feeling that we are legitimately about to make a mistake by closing this position? Because I already know this has gone up a lot. And we're due for a retrace back down. However, I'm looking at this, right? And it's tested this low several times. It's feeding the price to push price higher. I know it is. Should I hang on to it a little longer? Should I not? I have to edit a video here soon. I don't know what I should do. Allow me to view the future, see what the future has to offer. Because I may have already been stopped out on the app, on this Trade Locker app. It's consolidating. It's like it's literally just sat in this same, on that line. I'm going to do a better job tomorrow. I'm going to close the position. I understand my mistakes. I understand what I did. I know what I did. I'm going to make a video. I'm going to make fun of myself in that video for it. I am closing both positions. I lost that trade. I lost the trade the second I placed that line right here down. I lost the trade the second I saw this. Where did it go? This right here. Yep. That's correct. This right here. And thought, yes, change of heart mode. Go. I lost the trade when I thought this was a key level. Granted, it was liquidity. We should have known price was going to go all the way back up to this and then some. And that's exactly what it did. Should have known better. Should have seen it before it occurred. I will be looking up videos left, right, center all day for the rest of my day today and tomorrow morning when I hop on to take the trade that I want to take tomorrow. Can we even trade tomorrow? Let's see what... It's a holiday for someone. I don't know who, though. That's what we had for today. Oh, wait, you can't see that. Hang on. This. Here. This is what we had for today. And then tomorrow we have this. German and GBP bank holidays. No biggie. I think we, USD traders, can trade. If I'm not mistaken. If I'm not mistaken. I don't really know... I don't know what these 2 days are. It's April. Easter? Is it Good Friday? Is that what it is? I don't know. I have to check that again. I have to check that. If it's Easter, we can't trade either. That makes the most sense. Yeah. Yeah. Okay. So Friday, French, German, Italian, GBP. Okay, cool. So we are on Easter. That is a national holiday. Banks will be closed. Oh, hello. It actually goes much further on. Interesting. Either way, yeah. I lost that trade. We're gonna learn a little bit this weekend and tomorrow. What I did wrong. How do I improve? Where do I go? If you enjoyed this video, again, give it a like, subscribe, maybe. If you're new on the comeback and enjoy this kind of content, comment below what you think I could do to improve this, because I honestly want this to take off. With that being said, again, thanks for watching. I'll see y'all in the next one. Peace out.